Welcome to the December 14th, 2020 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman and president of McGowan Group Asset Management, the team that cares, a team of 9 people devoted to your success. Come see us at the Crescent or go to NetWorthRadio.com and type in enough information that we can set you up with a Zoom call. You're always welcome to come for an office tour. Why do you tune in to your financial weatherman, this YouTube channel, YouTube McGowan Group? Well, one of the reasons is financial education comes a piece at a time for all of us. And it's taken 35 years for me to get the right lessons in place and the right team in place to serve you even better than before because of that education devotion. Give you an example. When The Big Short came out, the movie, right, and there was a book, the movie was a very entertaining way, and we hope this is entertaining enough to keep your interest for 5 to 10 minutes a week. But when that book came out, and the movie came out, everybody loved the movie because it was very entertaining, very educational, by the way. And I was asked to do an interview. I went back, reread the book, and I learned more. And I actually went to khanacademy.com to go in there and learn more about the concepts about The Big Short, which was the crisis of 08-09. Now we're going to fast forward here to the crisis of 2020. This is the Dow Jones Industrial Average hitting the 30,000 mark, and that looks like too far too fast because we are in 100 days of a very dark COVID-19 winter. So the index is too far too fast. What asset classes are we going to be proudest to own by the end of 2021? I'm going to cover it here, not a recommendation for your portfolio till you get a written plan from McGowan Group Asset Management. There's the 38% meltdown. There's the recovery. What is this? Well, that was the announcements of the vaccines. It is anticipation that after the 100 days of the dark winter, we are actually looking at a potential end to the pandemic being recognized by mid-year. But this may be too far too fast based upon earnings. Now we're going to go a little deeper. Okay, this is the GDP forecast. Realize it's too small to see, so I'm going to blow it up in the future, but I'll work on that technology next week. Minus 31% in the shutdown quarter, the GDP. That's the annualized pace at which it contracted. That'd be about 8%. 33% gain the next quarter. That's making back a big chunk of what went away. And for the fourth quarter here, the updated GDP forecast, and we're almost done with the quarter, so it gets more accurate, 4.5%, 2.5% here in the first quarter as we get through that winter, and then 3.6 to 3% going forward. That's an economic recovery. We had told you right here, fastest recovery in history. My dad, Papa Dean, said it first, then Goldman Sachs said it. We brought it to you, of course, on the broadcast even before Goldman Sachs said the fastest recovery in history. And that's exactly what we have. So step one was don't sell everything into the panic I just showed you. And you want to own great assets where you're thinking in terms of 3 to 5 years, right? Now we look at GDP by the year. This year is a contraction of 3.5%. Now that we're through the year, that, you know, we're only 2 weeks from the end of the year, so that number gets more accurate. The analyst estimates that go into this. This is Bloomberg, by the way. And then 4% for next year, 3.9%, 3% for 2022. Now, higher taxes and more regulation are going to trim that recovery estimate. What happened after 2008, 2009? Well, we recovered, by the way, in global high-yield bond funds, and I'm going to cover that subject in a little bit. We recovered in 2009, took the Dow till 2012 because it was range-bound. That's likely what that's going to cause if we get higher taxes and more regulation. It'll be a range-bound index, so you want lots of cash flow and you want the right asset classes with good tactical allocation like we do here. What's this? This is the healthcare sector. This sector, not overvalued relative to what you're paying for other companies. Technology in an absolute 1999 frenzy. Technology this week illustrated by Airbnb. It's a travel app. It's now worth $150 billion. That's more than the 5 major hotel chains combined, right? And you could probably throw in there the other companies that compete with Booking. Well, is that worth it? I don't think so. That's 30 times revenue. There's some insanity going on in technology pricing, and it's a good time to harvest away from that category as we've been referencing. But healthcare, if you look at the major companies, the major drug dividend companies, some of the providers, Tenet Healthcare had a huge rally this week, 15% in a single day. That's a Dallas-based hospital provider, care facility provider. So what's happening here? Well, of course, recognition of revenue from pandemic preparedness, if you will. But the other thing that's happening in the sector, it's been undervalued. The growth rates, even unrelated to COVID-19, the growth rates are incredible, the multiples are small, and we're finding great bargains in this sector. And you can see it's moved into a nice trade right here, which is a breakout above its old high, and now showing promise, especially based upon fundamentals and cash flow. Now we move to the high yield category. Global high yield this week moved into positive territory for the year. It took it a little longer than the indexes, which were driven by tech frenzy. But you get your yield along the way, right? It's easier to hold an asset during despair, and the global high yield bond category, arguably the best fixed income category going into 2021 if I had to choose between municipals, treasuries, cash. I believe this category will outperform. We may hit our harvest points on this category in the first half, which we will do for clients automatically as a fiduciary to make sure that if we're able to take a nice premium gain, we will take it to protect. But that category now moving into much closer to our harvest points than, of course, right here where we added to it. Now, this is the pipeline index, energy infrastructure, oil and gas pipelines, very much out of favor, the politics moving against them. Why would it rally by 40% after the election? That's a huge rally. Oil hit 47.50, and we're about to see that this week. And where does it go from here? I'll cover some of the forecasts on that. But the whole energy sector is worth 1/10 of the technology sector in the S&P. And the cash flow from pipelines not only being reliable, but coming back into favor. You're looking at a potential energy shortage by the end of next year, assuming the vaccines, you get enough people get vaccinated, you restore the economy. UK announced there'll be a vaccine stamp for your passport, which I thought was a novel idea. That could restore air travel by the end of next year, and people aren't going to want to sit home. That's just a side note about what happens after the long, dark COVID-19 winter. But this category moving back into favor and outperforming here recently. This, of course, is West Texas Intermediate crude going to 47.50, back really equaling where it was before the pandemic. Demand is being restored despite the shutdowns. Now, if you take away the shutdowns after the spring and you've reduced supply and maybe over-regulated new supply, for example, new pipelines and new oil and gas supply, that over-regulation in the Obama administration led to $110 a barrel oil by the end of 2010. Wow, that may be an opportunity as we go forward. I want to cover just a couple of other things. This is Tenet Healthcare that I mentioned before. Boom! I want to see what was behind that 15% rally. It happened in one day. Congratulations, Dallas-based Tenet Healthcare. Whoa, $10 down here, $42 this week. It's great when a Dallas company prevails in the midst of the pandemic, but boy, they sold it off hard. Okay, GameStop, here's another retailer that made it through the pandemic, right? An out-of-favor category. They're the gaming company. GameStop actually got a capital infusion. You can see it right here. Boom, they're not going to go broke. They went to $250 this week, hitting $19.42. their earnings were not good, they're still losing money. So it's not something we would touch. But what is notable are these tremendous gains from the low point as the recovery is starting to be anticipated. And of course, Texas not shutting down like some of the other states. I will note there are 5 states with unemployment tragically over 9%, and they all happen to be pro-shutdown states. Now, I'm not arguing for or against shutdowns, but what I'm telling you is there will be regional differences in the 2021 economy, and we will bring you the strategy that goes with it. I'm Spencer McGowan, your financial weatherman. Thank you for joining us. Be sure to go to NetWorthRadio.com. I look forward to our next appointment together. Thank you for tuning in to our YouTube channel. I'm Spencer McGowan, President McGowan Group, your financial weatherman. We sponsor each week NetWorthRadio.com broadcast that has the charts and graphs, many of which you saw today. We also sponsor this YouTube channel. Be sure to subscribe for fast breaking news, an alert when we post something in a market condition that may have changed. Our goal is to help you as an investor make the right decisions at the right time. And that's part of what this YouTube channel is about, as well as NetWorthRadio.com. I am well served with a team of 10 people, including myself. And that team that cares is actually made up of people who are devoted to your net profits and your success, as well as excellence in service. If you want an educational experience to follow this up, get to NetWorthRadio.com, themcgowangroup.com. Right here, we disclose our net client experience all the way back to 2001. What that includes, the bear market cycles of 02, 08, 2018, and the recoveries through the most recent quarter. That is true education of investors and exactly how our clients have done, disclosed right here. Further disclosures, value at risk of loss. Yes, investments are going to fluctuate. That's part of the reason for this broadcast. And that can actually work to your advantage. We'll build that into your plan. So I urge you to go to NetWorthRadio.com, fill out the preliminary client questionnaire, a free 1-hour brainstorming session by phone or at the Crescent in Dallas, and we will map out a multi-year plan for you and your family that's appropriate. Just because we talk about a security on this broadcast or any securities doesn't make it a recommendation for your portfolio until you have that written plan. Thank you for tuning in today, and we'll be back next week as your financial weatherman.